Hey guys, welcome to another video brought to you by Total Control Traders. Now before we get into the details of what exactly happened today, I want to do a quick reminder that by the end of day today, the free trial to our trading community will have ended. The 7-day free trial, so if you're interested, make sure to sign up at totalcontroltraders.com. In the meantime, the YouTube 100 sub special will be ongoing. Make sure to enter YT100 to receive 20% off memberships. All right. Today we're going to spend a little bit more time on market to take a deeper dive on exactly what happened. Now, here is a crucial point on in my opinion, you should decide whether if you want to participate what's left of this potential last leg up. Recently just got a message with some people buying in higher, and then as the market turns around they sell at a loss. Now that is very common, so have your game plan ready as you're coming into this potential last leg before the dragged out long-term consolidation that we've been talking about. Now, I was looking at it today, not only based on the move, what happened, what caused the move, how the move happened, as well as I looked back at the charts, and then I look at our targets kind of thing. To me, the risk to reward is not exactly there while SPX is up where we are right now. When I look at it, the target of between 40-20 to the first target. So first target is around that 40-20 to the 40-50 zone. And then if that is broken, we're going to be pretty far extended from the daily 8 and the weekly 8 and the monthly 8. So would anticipate some sort of reaction around there, but at the time that if this is broken, we will be looking up at the 4200s mark. So knowing that, and seeing what happened today and what's been happening in the market, especially SPX, I've made a personal decision to not participate in this potential last leg up. But instead, I'm going to use this opportunity to start accumulating bear plays, whether if that's UVIX or VXX or SPXS, ETFs, leverage ETFs on volatility or bear plays, or further out, longer dated SPY puts. So, and I'm going to go into the reasons why I'm looking at it this way. Now, first, obviously, being that from where we are right now, there is about a 0.8% to that beginning of the first target, the 40-20 zone. So when I'm looking at this chart, there is a potential. There's couple of potential scenarios, bull and bear thesis. Remember to have both of them in mind when you are playing. So bull thesis, he's going to go up, and then this last leg up, you're going to be looking at a volume climax, because the volume is pretty decent, pretty sustained, the bull volume, ever since the bounce of the low of the consolidation on March 4th. So bull volume has been sustained. You're going to be looking at a potential of volume climax scenario, meaning we could very well just blast through this zone, volume climax into 4200 before a huge rejection coming back down. Okay, that is bull thesis that I have in my mind, and one of the possible scenarios. Bear thesis is we're gonna come up, get to that first target zone, and then we're gonna be pretty extended on all time frames, ADMA, all longer time frames, daily, weekly, and monthly. Then from there, are we going to form divergences? Oh, this is pretty hard to see. So no divergence on the monthly. there is potentially going to be a weekly divergence again. The last two that we have seen, this one being the first one, pullback was about 6%. Yeah, 6%. And then the next one potentially could be longer. Market is beginning to see some irrationality. So yeah, the bear thesis is after this 8% or a little bit more into the 40-50 zone, that would be 40-50, that'd be about 1% away. From there, then we're gonna see a reversal. We have ran for, let's start from this day. Now 9 trading days in a row. So we could see some big rejection from that first target zone. Now the other thing I was looking at, also adding to my bear thesis, is ever since the beginning of the move in November. Now prior to the move, that W shape that we saw, first pullback was 10.5%, second pullback was 9% before the rally beginning in November. Then since then, we've had our higher lows. The first pullback was 2.6, second higher low was 3.35%. Then the third one was 5.3, and the most recent one was 6%. So I am seeing increased bear actions with each single pullback, meaning that the next one could bring us to about 8%, maybe even 10%. Now I'm looking at this. Let's say we do reach that first target zone. 10% would bring us to the previous key zone that we had rejected, the 3674 area. 8% would bring us to roughly about the top of that zone, the 0.382. Now this this fib has to be corrected because now we made a new high, but it will be around that 0.382. So when I look at this chart, the upside of the bull side of plays, risk to reward wise, is starting to get very diminished versus the risk to reward to bear plays. 9 days of straight bull run, and now, well, with one red day being in the middle. Regardless, 8 out of 9 previous trading days were green candles. So without considering 1.5% to the upside or potentially 8% to the downside, I'm a lot more comfortable playing bears from here. Now knowing that, let's take a look at, let's do a little bit of a market deep dive today to see where the market's at, whether the leading indicators are showing that there's going to be signs of a pullback starting. That justifies the play for bears, or does it justify the bull thesis? All right, so that's SPX. We started off with SPX today instead of the usual NAS. NAS, we are stalling at that GP again. Even with a huge bounce day today, we have not broken over Monday's high. No, Tuesday's high before the pullback. 1, 2. The potential of inverse head and shoulder formation is still there. So this is still in the downtrend on the daily. We're going to need to see that higher low. If we start pulling back, we're going to need to see the formation of a higher low before the potential of next leg up. That would confirm the head and shoulders pattern, inverse head and shoulders pattern on NAS. So GP and key zone on top watch right now. If we break straight over, the bulls are strong, but we will need a daily higher low. So when we look at what happened today, forgot to zoom in on the time frame. Early morning today, sent out a message. Today's main watch, top watch, is going to be that FOMC around 12 o'clock noon for my time, 2 o'clock for the trading time. And let's take a look. Coming in, Actually, like, let's look at shorter time frames. There was a very nice play in here. Coming in, I was watching Netflix at the time, so I wasn't had all my stops in, wasn't gonna play this news, wasn't gonna play the reaction to the news, was just gonna basically watch it. I wanted to get more feeling and get prepared for the longer play. So coming in 11:55, before this, you can see it was just bear action, basically choppy and bear action all day. Then coming in 11:55, green candle, 12 o'clock, boom, big ass bull candle came in with huge bull volume. Then follow through over the next 2 5-minute candles, so next 10 minutes, before a pullback setting a higher low. Now around here was key to begin. I was watching on the 15 and 30 minute. On the 15, after this pullback, this is the reaction to the news. So this is the news, the big bull candle. Never trade the news. Unless you're a scalper, you know, this would have been an amazing trade. This is a reaction to the news. And then the key was over that next 15, 30-minute candle. We saw follow through on decent bull volume outweighing bear volume. So that was confirmation that the rest of the day was going to be green. And then even just the hold of the 15-minute 8, that was key. Then from there, we saw basically algo action, hold 15, a second hold of 15, third hold of 15, fourth, fifth, sixth. It just kept on holding the 15-minute 8. And that was the confirmation for continuation of bull play. Hope someone caught the move. This was an amazing play on majority of the tickers. Synchronized move across the board. So it was easy play. You know, you have any ticker you had on watch, any calls or option chain you have pulled up. All you had to do was just click buy quickly, and then from there you should be in the green position. Right. So NAS holding that GP. Key to watch over the next couple of days. See if we break through or gonna see rejection forming a higher low. Dow's making new highs. Dow's target is coming up as well. A little bit further away, more so around 3%. Dow's have been a lot stronger. Even as SPX made lower highs and the bounces and whatnot. Let's see how long. So it's had 2 red days over the last 9 trading days instead. But the move had been 8% already versus SPX has been 7%. So Dow is a lot stronger. That is worth noting. Meaning on the pullback, we could see much bigger pullback on the Dows. And not to mention, Dow's one thing notable is we never lost this pandemic trend line. Okay, bounce, 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 and then on the pullback, we never closed under that pandemic trend line. So Dow is a lot stronger. Now, let's get into the details on what the leading indicators look like. Actually, let's do US 10-year. So US 10-year saw a pop today. That bear divergence didn't have much follow through. And then today, what's the timelines look like on this? 7. Okay. So since the beginning of the day, pre-market, after hours, whatever you want to call it, we already saw a pop. And then started pulling back. 12 o'clock. 12 o'clock was a huge indecision candle. Saw slight pullback again before the dip getting bought. And after hours, dipped again and getting bought again. So the 10-year over 2-year is not yet showing me major concern. The daily is going to form another bear divergence. And this one is going to be the noticeable one. If we were to go make a new high, we will see a daily bear divergence on the US 10-year over 2-year. The weekly is already there. Okay. Monthly. So there is a chance that watch for a candle similar to this reaction coming for the remainder of this month as well as next month, because there's a monthly candle, makes sense. This one, remember, it had only took 12 months for us to move 1100% this time, versus the previous move had been 54 months, more than 4 times longer to move roughly about the same percentage, 1285%. VIX, today we slightly broke under that lower trend line of the wedge, long-term wedge. So if I were to draw this using the wicks, let's use the most recent. The acceptable low will be around 1846. I want to take a look at this again to see. So since pandemic to now, so 50 bars, 60 some, 40 some, 120, 203. Okay, nothing notable on VIX aside from the potential break of the lower trend line of the wedge. Getting a feeling, it's a good time to begin your hedge positions regardless. You look at the VIX term structure. March is okay. We're not too far from the target, the estimated target of 20. Oh. I just clicked the refresh and looks like March. Oh, because the monthly VIX buyeries gone. So starting April, you can see the prices are still going up. Even in April alone, that's about 10% away. I'm comfortable holding hedge positions, or at least starting hedge positions where we are right now on VIX. And then US dollars. So it's confirmed channel now that there's 3 touches on the upper trend line of the channel, 2 touches on the bottom so far. Based on today's move and the rejection from the upper trend line of the channel, I would anticipate further, if market were to continue bullish, you should see further drop on US dollar. Kind of interesting that we're finding a little bit of a double bottom here. So keep your eyes on US dollars. I was looking at the US dollars and on a weekly, monthly kind of thing. Not only is there a, what is this, monthly? Yeah, so there's a monthly bull divergence from low to the higher low, whereas the RSI is higher low to the lower low. This key support resistance area, looking for a bounce from here. And we should know over the next week or two. Keep your eyes on US dollars. So nothing too, overall, I'm not seeing anything too clear yet, whether it was bullish or bearish. So purely from a standpoint of where the market SPX is at, risk to reward standpoint, more comfortable playing bears. I'm okay skipping out on this leg up, given that we have already ran 8 out of the 9 previous trading days. Let's see what the follow through looks like tomorrow. We are still extended from the daily 8. Getting extended from the weekly 8. One last leg push up. I can see that being a climax kind of scenario. Watch for the volume. All right, so that's it for the market. Let's take a look at some of the tickers. First, hottest tickers, Bitcoin. So clear, strong daily bearish divergence. RSI higher, lower, higher, lower, high, lower, high. Okay. Nothing notable on the volume. Oh, there is a one other thing to note on the market. So as of late, aside from that 5 reasons I named on I think it was last Thursday's video, why I think there's going to be a long-term consolidation coming. Generally 3 reasons good enough for me to make a move. But last time when I made a video on it on Thursday, I noticed 5 reasons, and now as of late, I have found another 2 more reasons. One being I'm starting to hear a lot more and more of new investors coming into the market while the market is at new all-time highs, whether that's just a general stock market or Bitcoin options, whichever. There's a lot more new investors coming in, or they have been coming in for the last half a year to a year roughly. So that adds to the caution of potential big bears to come, as well as this being the other reason. Pullbacks are getting bigger and bigger each time we're seeing them. So now I'm looking at more than 5 reasons, just so we're on the same page. All right, so Bitcoin, nothing notable aside from that daily bear divergence. Gonna want to see what follows here. There's people saying Bitcoin, you're gonna see it over 100K. Nothing's impossible, nothing's guaranteed in the market, so that could very well happen. Based on the divergences, I don't see it happening anytime soon. And there's no clear direction on Bitcoin either. Given the divergences, I would still lean more to the downside. But this is what happened on the last divergence. It pulled back. Was looking for that bull flag. Instead, we just made a new high, forming another new bear divergence. So Bitcoin remains strong. All right, next is Tesla. Tesla had a very nice bounce today. Caught some of it early on and then didn't play it during the FOMC. But if you were to look at this chart, where we opened was key. Right at that low of the key zone. We opened on right about that, where was this? Opened 655, dropped down to the lows of 651. This bounce that within that first hour was an amazing play in itself. 5% bounce in the first hour. Then we made a higher low, and now we're seeing a higher high following the FOMC reaction. On the daily, we are trading over that daily 8 again. On the weekly, we are still rejecting from it. So tomorrow, remainder of the week is going to be key to see which direction Tesla wants to go. We are still trading under that weekly 8. Next is Apple. Same idea, we are still trading under that weekly 8. Daily wise, looking decent. Today though was noticeably weaker versus Tesla. On the hourly chart, you can see since open, it had just been straight sell-off. Sort of a forming a bottom here. Then FOMC came in and it started moving, but still had huge upper wicks. So noticeable weakness on on Apple. Next is PLTR. I think it's around the same kind of pattern. So PLTR is still trading under the 88. Huge gap down. Rejection from the 88. Hourly, similar idea. Actually, this looks a little bit more like Tesla than Apple. So first hour, we saw a gap down and a decent bounce of 3.5%. Then from there, formed a higher low, more so a sideways action. FOMC came in, started moving. Still seeing that huge upper wick though. So PLTR still looking a little bit weak to me. And the next is PDD. So decided to play this today. But decided to sell it before the FOMC happened because didn't want to take the additional risk. This was an amazing setup. You know, there's Kathy's been buying. There is flows coming in on it. So when I was looking at the chart today, we were right on that trend line. There's not many touches on this trend line so far. There's been 1, 2 touches, and now today was the 3rd touch. So I was looking at this today. Earnings out of the way. Negative 288%, big gap down, big sell off. Early on in the day, we were right there on the trend line. Does not make sense to not take this play, especially after that big gap down, sell off on earnings going into the trend line. So took this play. I think I sold it something like 10-15% gain. But then we kept moving afterwards, which is okay. Because we did reject from that hourly 8. So chart still looking a little bit weakish, bearish. There is a big gap that's left behind from this gap down on the daily. So gonna need to see tomorrow if you're in bull positions, especially given the bounce from this trend line, you're gonna want to see that follow through tomorrow. Huge bear volume today. Would imagine more downward price action to come. Let's see, the last time we had something similar, this would be something similar. Gap down. Next day was a little bit reddish still. Went back up to almost fill the gap before more price actions downward. So this would be something similar to what you're looking at last earnings. So there is still some upward price action to fill the gap before the next leg down. All right, next is W. Right at the upper trend line, inner upper trend line, or upper trend line of the inner wedge. Again, saving that 88. Nothing exciting yet. We're gonna need that volume to come in on the break. Chart is so ready. Multiple supports on this upper part of the key zone. So as previously resistance, now we are seeing triple support. Chart is ready to go. Give us that follow through. All right, that's it for the hottest tickers. Next ones up are the requested tickers. First one, we're gonna take a look at our what is it, FSR. I'm actually going to go through a few tickers today, seeing how we are actually doing pretty good on time. So FSR saw a decent bounce starting right at the beginning of the day. Bounce was even better than Tesla. First hour of the day, 8.5% bounce. But we did see, we were oversold, extended from the daily 8, extended from the hourly 8, not the daily 8, hourly 8, slightly extended from the 4 hours, but it's basically extending on majority time frames. So key now is we saw a rejection on the hourly 8 before the FOMC move up above it. This is the beginning of Head and Shoulders breakout. I would anticipate further price action downwards to follow. It's only been 1 day since the break. This is just a bounce. We could potentially see a back test of this before following through on the head and shoulder pattern. Next is, so I wouldn't touch this ticker, and that's why I haven't shorted or going long on it. Either way, it's gonna be a little bit more choppy. Next one, we're gonna take a look at. I can't remember what the other ones were. 1 sec. APHA. Nice safe on the 88. Wanted to see if we will back test this trend line, the upper trend line of the channel. Didn't quite get it today. We did see strong move today. Ever since the beginning of the day, bouncing from that 0.382. First hour, we bounced about 6%. Then we bull flagged from there, going into FOMC, and then started moving again. However, we are seeing some upper wicks forming. Be patient on the entry or the add, whichever one you're looking at. Right now, I am still in the core position, looking for an add around this back test of the trend line. But I want to see a few more days of price action to have a better idea of what we're looking at here. Because of this gap down, bouncing from 0.382, it's a little bit more uncertain. Next is, let's do VFF. Still a bull flag formation on the weekly. Yeah, on the weekly. So nothing new here. And let's see, what else do we have? I know there's a whole lot more. Oh, the perma band. I forgot to move it from my charts, and I saw the move today. I'm just like, really? So confirm perma ban on BABA. Today, so we played this on Tuesday. Where was it? So this was the 12th. Ah, there we go. Closed near the high of day, gap down open, sold off, and then today, straight buy up. What a chart to be playing, eh? Essentially, we did save that trend line, but now not going to be looking at it. We did close a little bit over that 88. Know that we can't see a gap down again tomorrow. Let's see, PLTR. This one is. Let's take a look at ABNB. Saving the 88. Most charts look the same. Nothing exciting. Gonna need a couple more days to see what the pattern actually looks like. All right, next ones we are gonna go Wall Street bets, GME. Nothing exciting. The higher low forming yesterday did break under the 88. Today we did close under the 88 as well. We are still trading over the weekly 8. So chart's still okay. We did negate that. We have now potentially negated that ABCD pattern. But as long as this 169.73 holds, where we saw previous resistance, breaking over, saw support, saw another support. If you're in it, that should be your stop somewhere right under that. So you're still looking okay. The chart is still looking okay. This could just be a warning sign for closing under the 88. But we're gonna need, the volume is not really there to justify. The bear volume is not really there. Well, earnings is coming up on March 23rd. So be aware of that, which is in roughly a week's time. Next is AMC. Noticeably stronger. We are still trading over that 88. Volume still looking nice. ABCD pattern is playing out. Target of 23 is in range now. This is now another 70% move. More than reasonable. Next is KOSS. We're just waiting for that 88 to catch up on KOSS. Eh? No bear volume. We saw some early volume pre-market today. And then we saw volume at the open. But then it sort of just faded off. So it's nothing interesting yet. We're going to need to see at the open something like more like this. At the open, decent volume come in and then following through with more bull volume. So far, it's just been opening up with bull volume and then fade out. So the 88 is catching up. I am keeping a very close eye on this for the next few days. Gonna want to see, have moved the stop up now to roughly, I think it was Thursday's low now, 24.40 versus 23.20. Let's see that follow through very soon. Nothing too exciting on ARC trades. There are some additional tickers I wanted to go through just to make sure that we're not missing any opportunities here. So let's see, BBBY trading over that 88. No exciting volume. It's just a slow grind up from that 88. Closing right on previous resistance. That is a very interesting close. 2 cents off. Okay. Nothing too exciting on this chart. Potential for a rising wedge. Somewhere around there. So right now it's in the middle of no man's land, no trades. Let's see what the reaction is. You know, if you want ideal entry, watch for the touch of the lower trend line. If you want an exit, watch for the touch of the upper trend line. There, that's a little bit more accurate. There. So 2 touches on the lower trend line so far. 4 touches on the upper trend line so far. Keep your eyes on this wedge. Next is GOEV. Still stalling on that GP. This essentially is a daily bull flag on that GP. Now I'm going to be watching this because lately there's been a discussion between me and a close buddy that we were talking whether it's a good thing to bull flag on resistance or right under resistance. My thought process was that it's bad to bull flag on resistance, but it's a good thing to bull flag under resistance, as we saw on APHA. But then we ended up seeing a sell off on the APHA. So I'm going to be watching this, bull flagging right on GP with some wicks both ways. I want to see the reaction, the follow through of this. Because it's on the resistance, I would imagine bearish action. But it's going to be interesting to watch. Next is CCIV. Lots of indecision candles. Doji, double doji. Wicks everywhere. Earnings was not out. Okay. Judging by the volume, I would imagine the earnings was out, but I don't see numbers. So not something I'd be trading right now. Let's see, what's the move so far? 60. Wow. Does not look like a whole lot on the chart, but it's been a 61% bounce from the lows so far. We lost the GP, so overall the chart is still weak. I would imagine it to be weak. The bounce, I don't think we've seen the 0.382 yet. Nope, not yet. So I would anticipate further upside on this, at least to the 0.382. We did see a bounce from the 88 today, holding that key zone as well. Maybe I'll take a look at this tomorrow. Would anticipate a little bit more bullish action on this. Next, CYTH. Upper wicks. Earnings was negative. Big bull volume coming in after earnings. So there's some decent upside potential. Based on the bull volumes and the lack of bear volumes, I would anticipate further upside. Bounce so far 128%. CCIV, nice. Upper wicks not giving the bulls too much confidence. We're going to need a break of that 1256. Previous support resistance and now becoming resistance again. 1256 seems to be, the chart seems to be reacting to that price. So keep an eye on that. Next is blue. It's a pretty decent bounce. Bouncing from the 0.382 today. However, slight increase on bear volume trading under the 88. So chart looks a little bit weaker. We did reject from the key zone before the gap fill. So there is huge upside potential to this if we ever break the key zone. There is, what is this? 30% upside. Entry around the 0.382 would actually be not bad. GP somewhat makes sense too. Big potential on blue. KS. Last but not least, let's do KHC. Another gap play. Not an inverse head and shoulders. It's more so a rising wedge. Somewhere around there. So rising wedge on the daily and weekly. We are in the gap fill territory, but we are at the top of the trend line of the wedge. Try to find an alternative trend line. See if we actually broke it. We're gonna need a clear break of that area. But chart is actually looking pretty decent for a gap fill potential. Risk to reward wise, we're looking at 20% upwards action. Already been 3 touches on the bottom of the lower trend line, so it makes sense if we were to break. Let's see, 1, 2, 3. I would think one more rejection. On the longer time frame wise, when we look at this, it's 1, 2, 3 touches on the third touch on the top right now. Third, and we already had 3 touches on the bottom. So let's see if we get one more rejection from here, making a higher low. We are extended from the weekly 8. Not extended on the daily 8. There's a chance we make a higher low before the actual break into filling this gap. Chart actually looks pretty good. All right, so that's it for today's video. Reminder, last day for the trial. Make sure to check it out at totalcontroltraders.com. Don't forget to give a thumbs up. If you enjoy the content that we provide and you're looking to build that pot of gold, please consider subscribing to our channel where we provide new videos daily. And remember, the best compliment you can give is by spreading the word about our channel. Also, check out our website and Twitter. Website, totalcontroltraders.com and Twitter @_TCTraders_. We offer free trial, last day of it, to our chatting platform where trading ideas are shared, charts are reviewed live, as well as my personal trade callouts. Last semi-monthly accountability check on my personal trade callouts was 90% correct. Hope you guys stay safe and be in control. Thanks for watching. I will see you in the next video.